Welcome back to FT Markets. The UK is about to vote in a general election and political excitement indices are rising, but how are markets going to react? With me to discuss this is Ewen Cameron Watt, who's Chief Investment Strategist at BlackRock. Ewen, welcome back to the Financial Times. We should perhaps start by looking at how markets have reacted so far in the run-up to polling day. And you brought along an interesting chart which looks at volatility in sterling markets, where we have seen some pickup in nervousness. Tell us, what's your reading of where we are and the reaction so far?
Well, I think that it's understandable that currency volatility rises. Individual securities inside the stock market have been trading around a little bit of uncertainty. The gilt market hasn't budged at all. And so the currency takes the fluctuation.
But actually, the volatility we've seen so far for the 2015 election is actually lower than it was before last September's Scottish referendum.
It's been higher, and it's just coming down a little bit now because I think the sterling market's got adjusted to the idea there's going to be no overall majority.
Explain why the levels of volatility have been so constrained, if you like, because actually everyone says this is one of the least predictable elections we've ever had in this country.
Well, I think it's the most predictable election because we know there's going to be a coalition. We don't know who it's going to be, and we know that it's going to be a while after the polls close tomorrow before we get an outcome.
But aren't financial markets supposed to dislike uncertainty and not like coalition?
I think we found in 2010 that was not the case, that although it only took 4 or 5 days, there really wasn't much in the way of fluctuation.
And what about the sort of idea of coalition governments? Would that be, I mean, it depends presumably on the composition of the coalition.
I think there are 3 outcomes. There's the outcome where the Conservatives lead a majority, which will then, I suspect, see further volatility in the currency because of concerns about a European referendum.
The Tories would have a referendum on
the second is a kind of Faustian pact between Labour with tacit SNP support, which I think will gradually work its way both into currency volatility. That would be the first separatist party to hold the balance of power at Westminster since 1885, and I think that's an important topic. And the third is a kind of fudge in the middle, which with less government and a party which is in office but not in power.
Okay, we should come back to those constitutional issues later on, but just what's important, I suppose, for markets is what happens to the UK economy. And if we look at your second chart, you've made an interesting comparison of where we are in terms of consumer confidence so far.
Well, this shows that in every election, if looking at the dark line, since 1983, consumer confidence has declined after the election. And this time round, as we see in the blue line, there's been a huge rise in consumer confidence in the last year or so. And the reason for that is very simple. After an election, every election since 1992, as the Institute of Fiscal Studies points out, there's been a rise in taxation of at least £5 billion, and that takes the top off consumer spending.
But the point is we're going into the election in quite a relatively strong state compared to other.
We're starting from a strong position, but I would expect there to be a decline in UK consumer confidence and UK activity, or the growth rate of that, over the next 6 to 12 months.
Okay, how does that transform then into reactions in stock markets or gilts?
Well, there are certain shares and sectors in the stock market that would do, in inverted commas, badly if Labour is in. Utilities, because of a price freeze. Yet utilities have not been performing very well for some time now. Retail, because of a rise in the minimum hourly wage. But most of these are pretty well flagged. I think that the swing sector will probably as always be banks because of just uncertainty about quite how hard new regulation might be applied.
You mentioned earlier these constitutional questions. There is the issue about whether we might have a referendum on EU membership. There's also possibly the revival of Scottish independence and breakup of the UK type factors as well.
Well, as Martin Wolf has pointed out, there is a question mark over the use of a union if one component of it is constantly wishing to have different terms from the rest. Now, there's clearly going to the Scottish question, I would say, rather like the Irish question in the 1880s to 1920. The Scottish question is not going away on Friday, it's here to stay.
Okay, BlackRock, your investment strategist at one of the biggest asset managers in the world. If there's one thing that you worry about happening on Thursday night, what would it be?
I think probably a position where the parties don't recognise that one of the parties doesn't recognise the game is up and the thing just gets dragged out for into June, for example, which is perfectly feasible.
Okay, Ewan, we better stop there. So some qualification there about the outcome for the election, but overall, not too much volatility so far. Maybe it will remain so.